This is Mark, and I did a video on earnings of Amazon as of August 3rd, and to give you some advices how to prepare yourself and hopefully to gain some money with the Amazon trading. Okay, take a look. Maybe you go into the fundamentals because you cannot just go create right away a strategy if you're not knowing a bit more about the Amazon stock. For there, I would suggest you take a look into www.nasdaq.com because they give you all information like the quarterly earnings forecast. I look a little bit here how the June is looking from the analysts, and for instance, there's an upgrade, so it indicates slightly bullish that they are bringing some good earnings. What I like very much is the after hours and pre-market. That is actually interesting when actually Amazon has published the earnings. Just for interesting, when the stock market closed on the August 3rd, I think it was just 1 minute or 2 minutes later that Amazon already published the earnings. So it's really interesting to see in the after hours. But anyway, in overall, I think it's very nice to look into this Nasdaq side. Then another thing which really I have to say that this is getting more and more important too is not only to look at the stock, looking a bit about the market sentiment. Why? Look, you have seen that Fitch downgrades the US Treasury bonds, and actually the 10 years US bonds have reached a new high. So in other words, it's not only the stock, it's the whole market which actually could be in trouble, and then even the best earnings of a stock may not trigger really to buy the stock. I take an example of AMD, Advanced Micro Devices, which actually had good earnings, or at least reasonable earnings, but the stock dropped by 5% just in the moment where Fitch actually more or less downgrades the US bonds. So not to underestimate that there are some external factors. Okay, let's go now into the analysis of the stock Amazon for options. Best thing is you go again into hopefully tastytrade account, you go under trade and you choose just a short strangle here. You go and actually you get a proposition by the system. Now usually the system will not propose you the right away the next expiration. Maybe it always pops up let's say August 18 or whatever. So you need to change to August 4 or at least change to the next possible maturity because it's an earnings trade. And then actually pops up then let's say for instance 2 strikes and already gives you the first information about the strike range and delta. Let's say for example, this example is that if you click here, this kind of button here that you want to extend the width, then it really extends, but the delta remains the same. So in other words, the call had an 11 delta while the put has a 7 delta, and you can see it's a -4. I always suggest that the best thing is really that you keep a kind of delta neutral. So in other words, you would have to adjust the put or the call, whatever, that you would reach the same delta. Here are just information that interesting is the call strike is 10.7% away from the actual price. So while the put is only 10.23, and you see too they have different volatilities as well. So let's adjust the delta. See, now we are in the short strangle delta neutral. So what I did is actually I adjust the delta. You simply can click here. I mean, with the mouse, you can go up and down of this range of strikes, and then you right away will pick the delta of maybe 6 or 7. Here I have a delta of 8, and you click here on the put side, and then you get the delta. You can change here the delta, and I get a 1 of 7. I have even this open interest, and then you see I get a 120, 150, and still get a credit of 75. And now you can see the put and call strikes are more or less the same. Even the call strike is better. Why? Because this is again a kind of call skew. So in other words, the market expects already higher earnings or better earnings from Amazon because you have more call buyers than put buyers. Well, this is quite interesting because it would indicate that Amazon would go up. And yeah, I think sometimes too it's a good indication because I saw that the same thing I was seeing in Apple. I mean, in Apple that it was more neutral or in other stocks. So the expectation was on Amazon really that the market goes up or the stock will goes up, while in Apple people were a bit reluctant in a way that they were not sure if really the stock would go up and down. It's a nice indication. I mean, I always look at it and I adjust it, but it doesn't mean really that now every time it's like that. If you have a call skew, the stock will go up, and if you have a put skew, the stock goes down. Is again just the market expectation of the investor, but even any investor can be wrong in some adjustments. So we are aware of it. Finally, on the third, what did I do? You can see Amazon at 128.20. So what I did is expectation slightly bullish. So already about 30 minutes after the opening, I actually sold, that you can see here, a call and a put. For any reason, I had to sell it separately, the call and the put, because I try with a short strangle, but for any reason I don't get executed. So I did 29 to 21, the 148, 113, and get a 50 credit. And then I was waiting a little bit, and you just see here about 13 minutes before closing. Don't forget, this is Swiss time. I just did the auto short strangle 112, 147 and get a 39 credit. Okay. So on the 4th, which you can see here, Amazon open up about 100 to 141 and even go a bit 142. So it was a bit nervous, and you can see here already 3 minutes after opening I cover at least one at 0.11, and the other one I cover about 10 minutes later at 0.07, the call side. Obvious that you would tell me now I would have to wait a little bit and I would not have to cover it because Amazon at the end was again about 140, 141. But you see, when you do the short strangle, I think myself, okay, the expectation is good. I don't look about the put options. I leave them worthless. But the call option, who knows that there's a fool coming up to 145, well then these prices suddenly would go up to 1 or 150. So just cover it. Net I get a profit of 0.67, which is really nice, because obviously these are small transactions. Again, I did that because of the market sentiment, which was not the same as last week, but still a nice profit. Parallel to the short strangle is this strategy called short covered call. It's like you sell a call against a position, and this is, you can do that in one transaction. It's like you buy the stock and at the same time you sell a call against it. And I did that is because the volatility is so high just in front of the earnings that it makes really sense, because you can see here that I bought at 127.63 and I sold the 120 at 493. So I have a kind of break even at 122.70. That means Amazon could drop to this price here and I still would be break even, or let's say a small profit. Whatever is below 122, okay, I would get into a loss. So what I did is just prior to the closing, I closed this position. So I mean, you see here, that one I bought at 122.70. I sold at 123.75 because the stock went up to 129. So I said to myself, okay, let's close this position and open up a new one, which you can see I did that again 4 minutes prior to the closing. I mean, prior to the earnings. So here I bought at 129.03, which you can see, and I sold at 433. So in other words, my maximum profit is actually 433, and my break even again is 124.70. So whatever is below 124.70, okay, I could get into a loss. But don't forget, even when I would maybe Amazon would go down to the 120, I still have the possibility to sell again a call, maybe the next month or whatsoever. But it did very well, as you can see, that the next day, about half an hour after opening, I could sell this transaction here with a nice credit of 128.98. Means it represents more or less this 4.3 credit, because you see you may sell at 140, but you have to buy back the call, so it remains the same. My maximum profit cannot be higher than 4.33. But now the most interesting thing, and you can see this here, is when you do this transaction, let's say here you do this one and this one, this represents these two here. So when you look at the commission, you bought and sold, and here you sold and bought, so you pay for the whole thing $1. Can you imagine? You don't pay anything for the stock, you just pay one leg of the option with $1, right? And this, what you can see here are the stock exchange fees, so this is unavoidable, you have to pay. But what I want to say is that this is actually almost for free. So you make a transaction like you can see here, including the stock, but you pay $1. I mean, this is really incredible. So that is what I think you should really take this into consideration next time. Maybe you want to do a strategy. Why not just buying the stock and selling? Obvious, I want to sell it right away too. After, I don't want to keep Amazon, but I just do it because of high volatility, high premium, and hopefully the stock goes a bit up and then sell it again for everything. Quick summary of the earnings. I mean, as I said, preparation is a must in order to choose the correct strategy. You define your risk and your expectation of the stock direction. Well, this is the basic, right? Again, feel the market sentiment. This is what happened to me. You only focus on the stock and don't realize, oh my God, now the stock market is coming down. Because it happens to me, I did a short strangle on AMD, was really good, but at the end I lost because the stock went down of the market, the stock market in general. This is just this day where Fitch announces the downgrade of the US bonds. Again, always check the IVR of the stock. It should be really higher than 25. Then you have chosen a strategy which you have seen in the example. Try to put the delta into neutral. So the lower the delta, the less the risk or less the premium, I agree, but put it into delta neutral, which really helps you. Then, like me, try some new strategies. The short cover call is a really interesting thing. Obviously, it must work for you too. But if you have seen that you just pay $1 for commission for, let's say, 4 trades, and you expect the stock goes up, well, it's really something incredible to do. Then, when you look about these earnings trades, like last week, I did about 10, and some are working, some not. I mean, this is the idea of these earning trades. I mean, out of 10, I said 6 or 7 should work, 1 maybe doesn't work. I have to admit that out of 10, 9 worked very well for me, 1 not. And obviously now I roll over this trade and hope that it will work maybe in the future. I mean, it's just you roll over. It's like you postpone the loss, let's say, but still I think it will work. So you make some experience like I did with Spotify or PayPal, and I know that I will expand next time the delta range. That means I will go into a lower delta, especially from some stocks. So it's like I make an expectation that these stocks, they can drop by 15 to 20%. So I will adjust the delta for it. This video about the earnings with real new ideas, new things. I mean, every time I say you need to try out new strategies, what is suitable for you. And you can see it's nice when you, at the end of the week, you can see all these earnings trades, and then you can see, okay, some work really good, some maybe not. But I think this is what you need to learn in an experience as a trader, that you know how to calculate your risk, and some are working, some not. Well, if you have any question or suggestion, feel free to call me, to write to me. No, call is not possible. Just write to me, and I will be happy to answer. Okay, so enjoy your day. Bye.